Good morning. Welcome to Stock Market Today. It's Friday, November 6th, 2020. This is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email. Get a lot of the content for this show, as well as give you daily stock ideas to consider. And that hits your inbox every trading day before the market opens. So let's dig into it. It's been a long week. It's Friday. We made it. U.S. equities finished sharply higher in Thursday's trading, with the S&P 500 on track for its best weekly performance since early April. Materials, tech, and financials outperformed, while defensive sectors, healthcare, and energy lagged the broader tape. Treasuries were flat on the day. The dollar saw some big declines against the major crosses. Gold finished up 2.7%. That's 2.7%. WTI crude down about 1%, but on track for a big week of gains. As we get to the desk this morning, we're giving some back. S&P futures are down about 80 bips, and NASDAQ futures are as well. European equity markets are lower after 4 sessions of gains. Asia turned in a mixed session overnight. The Nikkei in Japan outperformed, and China lagged. Treasuries are mixed. The dollar is weaker against the euro and the yen. Gold is up 0.5%. Oil is pulling back. WTI crude down about 3.5% to kick us off on a Friday morning. And it's jobs day here in the U.S. The October non-farm payrolls report is on deck. Let's look at the structure of the market here. There's your big rally over the course of the past 4 days as the unwind of the consensus blue wave bets continues. Now, it's been a great week for equity bulls. There's no two ways about it. We're not going to argue with it. But I ask, what's changed? From a trend perspective, what's changed? If we look at these charts, the answer in my mind is nothing. Right? We still have a consolidation within the context of this bigger trend. We still have a consolidation within the context of a bigger trend for SPY and Qs. Now, small caps are encouraging as we get a topside breakout from this near-term consolidation, but we still have the January, February highs to contend with. Small caps have not gone on to all-time highs yet, as SPY and Qs did back in early September. So the key levels remain in place, right? 320 is key support for SPY. The move through 340 increases the odds, gives us eyes for the highs. Qs, same story. 260 is support. Move through 280 equals eyes for the highs. 240 to 250 is the support zone that matters for small caps. And we look for an attack on those January, February highs before the COVID-induced sell-off, right? So we're now playing for the highs while continuing to manage risk. And I think, we still have to manage risk because we're still in a consolidation that, for all intents and purposes, could break in either direction, right? Odds are we're going to test the highs, right? That's the view. That's when we connect the data points. Odds favor us testing the highs. However, if we think about it, right, nothing's guaranteed in the market. We still want to manage risk. There's still scope for a downside break from a consolidation, right? Just as there's scope for an upside break for a consolidation. The key is, what are the odds of each? And I think the odds favor at least an attack on the September highs for the SPYs and the Qs, and an attack on the January, February highs for IWM. That's the framework. That's how I'm coming back to it. We talk constantly about how I get there. Let's hit our market in a minute. What are we writing about today for Chaikin Analytics clients? Well, we continue to see squaring of consensus blue wave positions. That's, playing out. Don't know how long that's going to take to play out. To me, it's going to be interesting to see what trends develop after positions are squared and investors start reevaluating the landscape. Strength in semiconductors is a welcome sign for equity bulls, and it's a driver of our view that we're odds favor us attacking the highs. The growth value ratio begins to resolve higher as those blue wave bets are unwound. And that's playing out as the copper to gold ratio stalls. And that is a key relationship on which we are focused constantly. Futures point to a lower open in front of non-farm payrolls today, as I said. Let's hit the major indices now. Looking at them from a power bar perspective, stands to reason that the power bars would improve with the strength that we've seen over the past 4 days, and they have. The Dow is still bearish, though less so. 3 bulls to 4 bears after tacking on nearly 2%. S&P 500 tacks on almost 2% as well. 140 to 76 bulls to bears there. NASDAQ up 2.5%, 2.6%. 24 to 10 to the good on the bulls and bear ratio there. Small caps outperformed 744 to 248. Bulls to bears. Bonds uptick, sending yields lower. Materials, your best group yesterday, and one of our favorite cyclical sectors, as we've been talking about since June. 9-2 bulls to bears after materials add 4.1% on the day. According to the Chaikin Power Bar, small cap stocks and large cap stocks are bullish. Major indexes across the board are mixed. Let's hit our stock of the day now. One of the big themes for me for a while has been commodities, and in particular agricultural commodities, and kind of ways to gain exposure to further upside there in the equity market. I've looked at a few names, one of which was Mosaic, which I got completely wrong, which went lower after its earnings report. But this Corteva is a similar trend. CTVA, bullish rating here at Chaikin Analytics. Strong trend above the rising long-term trend line. It's part of the chemicals industry group, but it's an ag play here. So that group is strong. Stock did trigger a money flow buy signal here on our platform as it holds above the breakout level of $32, right? Overbought, oversold indicator rounding up and out of an oversold position on a stock that has shown some good relative strength since the beginning of October. Money flow ticks back to the positive side. And so if I'm thinking about ideas, if I'm thinking about themes that are playing out, I really am spending a lot of time focused on commodities as an asset class, because if that is a trend that gets going to the upside, that trend, and in particular, the trend of outperformance, if it takes shape, that can last a long time. Commodities outperformed equities from 2000 to 2011, right? And then equities have outperformed since. So these trends, once they develop, can last for a long time. So it's something I'm paying a lot of attention to. And in full disclosure, I do own Corteva CTVA in my personal account. Let's take a look at what the sector tracker has to say now. Movement over the last 5 days. Obviously, things have been strong. Everything is green. Healthcare, top of the list, right? A lot of election movement there. Materials, one of our favorite cyclical plays, as we've talked about it, right? Corteva is obviously a material stock as well. Seeing tech in the top 3 spots is bullish. It's the largest part of the S&P 500. And then there's our other cyclical favorite, industrials. In the middle of the road, comms, fins, and discretionary. And then towards the bottom of the list, we like to see the defensives towards the bottom of the list as the market's rallying, right? They can rally. That's fine. The more, the merrier, right? From a breadth perspective. But when the market is in rally mode, we want to see the defensives, staples, and utilities at the bottom of this list. We want to see the list green. We want to see the defensive sectors at the bottom of it. So far, so good. Our industry in focus today, speaking of tech, is Innovative Tech Services. This is an ETF that trades under the ticker symbol XITK, and it's outperformed the S&P 500 over the past 6 months by more than 30%. Has a strong power bar ratio here, 18 bulls to 10 bears in our model, and it's currently ranked number 14 of 21 subsectors, having moved up 2 slots over the past week. So when we're looking for ideas within the space, we want to focus on names like Cohu, COHU, Alphabet, obviously we know it as Google, GOOGL, and SS&C Technologies, ticker symbol SSNC, with a very bullish Chaikin Power Gauge rating for all 3 of those names, which are holdings in a fund that is basically on the cusp of going to new highs. Bullish rating for XITK here, strong trend. Notice the difference here between this fund and the Qs and the SPY, right? SPYs and Qs, actually made it down to those early September lows in this consolidation. This is still very much an uptrend. Has found support at the rising long-term trend line, higher highs, higher lows at your textbook definition of an uptrend. And we're on the verge of making another new high as the indicator, our overbought, oversold indicator, begins to move higher in an oversold position. Massive outperformance here, as it has been for the better part of past 12 months. Bullish rating. Only real knock is money flow. I would expect to see that start moving in the right direction in fairly short order. So take a look at XITK. Drill down. There are 18 names in here that are bullish that could be compelling opportunities. Let's take a look at yesterday's movers and shakers, our gainers and losers on the S&P 500 Albemarle. The winner side of the board is all earnings, right? So we're not going to kind of beat the dead horse here. You can see it. In the midst of the election, in the midst of everything that else is going on, we're still in the heart of earnings season. So investors like what they heard out of Albemarle, nearly 13%. Qualcomm, part of that semis group, monster move yesterday, up 12.75%. Corvo, another semiconductor stock, earnings sent that stock higher by nearly 10%. PH, 9.5% to the good on their print. Perrigo, one of the key names in the kind of generic drug space, 9.5% to the positive side following their earnings announcement. Hanes Brands, HBI, guidance disappointed the street. They also announced a strategic review. That stock was down 18.5%. Biogen given some back, down 7.5% after rallying over 44% the previous day on some drug news. I will note that Biogen is halted here this morning in front of their appearance in front of an AdCom meeting. So that stock is halted. Just be mindful of that. NCI earnings take 7.2% out of the stock. Paycom, PAYC, loses 6% following their print. Jack Henry down about 5.4% on the heels of their earnings announcement yesterday. So still earnings season, busy night of earnings last night. So you'll see some movement there. We have non-farm payrolls today. There is a lot to unwrap on a Friday, as we still don't know who's going to occupy the Oval Office come January as well. So a ton of moving parts. Stay nimble out there. Look for your opportunities while continuing to manage risk. Now, here to me, this is the key theme, right? I'm not an economist, but this chart allows me to kind of play one on TV, if you will. We've talked about it a lot. Just to reiterate why I look at it and why I pay such attention to it. Copper is an industrial metal, widely used throughout the global economy. Gold is a precious metal. If we take a ratio of the two, right, gold is turned to in times of uncertainty. When copper is outperforming gold, to me, that's a sign that investors anticipate a better economic environment globally. And when copper is lagging gold, as it did for over 2 years, that's a sign of investors positioning and setting up for slower economic growth, right? So in that, this drives a lot of our views, right? So when growth is slowing, we want to own growth companies, right? Tech, parts of healthcare, parts of discretionary. The growth over value trade becomes an easy call. Now, since the lows in April, copper's been outperforming gold. Obviously, a lot of stimulus hitting the market, and right, the thoughts of a blue wave, right, started getting investors of the view that a stimulus package could be much bigger than anticipated, and that could spur growth. Does that come off the table now? If a blue wave is not the scenario that plays out, I still think we're going to get stimulus. It just could be smaller than investors were anticipating. So we want to watch this ratio here. It's at a key level within this kind of resistance zone. If this continues to work higher, that would be, to me, a sign that investors are pricing in a better global growth outlook. And you would expect to see, the value in cyclical areas of the market outperforming, as they've been doing for the past couple of months. However, if this ratio stalls here as it is now and then turns lower, you kind of have to go back to the playbook that was in place through most of 2018, 2019, and that will largely play out as interest rates move as well. If the copper gold ratio is moving higher, we would expect to see interest rates moving higher, and the inverse is also true. So we're going to watch this here. Again, I'm not an economist. I don't spend time poring over economic data. I let the market drive my views, and this is one of the key data points and key themes that I like to look at to develop those views. And here's your growth over value trade, right? As that copper over gold ratio has been moving higher, especially in the near term, we've seen the growth over value trade stall. Now, with potential for a smaller stimulus package, right? You also have COVID cases ramping up around the world. You're seeing some restrictions put in place in Europe. That could weigh on economic growth. So now you're starting to potentially see growth break topside from this consolidation. It's early days. We want to give it some time to play out. If that is the case, we would expect to see the Qs outperforming the SPYs at the bottom of the chart. As we look at the RSI of the ratio, we can see it's breaking this downtrend line. Just in general, I place a lot of importance on semiconductors to drive my equity view. Semis on a relative basis, having a monster move to the upside following the election on both an absolute and relative basis, confirmed by momentum as the RSI holds bullish ranges and moves higher. So if semis are outperforming, and especially if they're doing so at an accelerating rate, that's a key data point that drives a bullish equity view, which is why I say the odds favor SPYQs going back to those September highs. So that's the framework. That's what I'm using here on a Friday morning. Just a special thank you for taking the time to tune in every day. Hope everybody has a great weekend. Be well, be safe. Take us for a test drive. I'm back Monday.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.